Dig deep into the wallet, hope for the best. Welcome into MidPoint, our daily segment. The Money Master, Newsmax Director of Financial Newsletters, Jeff Yastine, who is watching the market carefully, frightfully, looking at it with both eyes and just seeing exactly where all the money is. Tell us where the money is, Jeff.
Yeah, for today, the Dow was about break even earlier in the day, actually slightly positive. Looking to fade a bit here, down about 16, 17 points. The NASDAQ is up about 6, and the S&P is down about 2 points.
What's the week been?
It's kind of I'll say a quiet day for today.
What's the week been like then? How would you characterize it?
It's been a good one. If you're looking for higher stock prices, anytime you have a week like this where a lot of people call it a melt up. Instead of a meltdown, it's a melt up. You can't point to any one specific thing, as we've been talking about at various points this week. But nonetheless, the market is moving higher, or at least not going down.
All right, we have not yet heard from Janet Yellen. She has her keynote speech in Jackson Hole, Wyoming, that coming up this evening, I believe. How soon do you think interest rates are going to go up here? Is there any guess or any scuttlebutt moving around the financial communities?
Yeah, she did actually give some comments earlier this morning, around 10 o'clock Eastern time.
Okay.
And the general gist of the news reports is she's basically noting a tone of caution regarding when the Fed would raise rates. And it really hasn't done much to change Wall Street's perceptions. The bets right now are perhaps the summer or late of 2015, so at least a year from now before you would see rates move higher. And as we've seen with the Fed before, they reserve the right to change their mind if they don't like the way the market reacts. You'll see them come in and say, oh, forget what we said earlier. This is what we really meant, in a way in an effort to sustain the stock market, because that's really, in many ways, what this is all about now.
Isn't a big part of it that while the unemployment rate has actually steadily declined here, there's a lot of other things in the job market right now and not really sure that they don't really know how to assess a lot of this right now, and that's what they're waiting on?
That's true. There's a lot of structural factors and other things that they believe are sort of not fully reflected in the data, and because of that, there is concern about whether employment is really showing a true picture. But, if you're a bear, you can argue it the other way. There's a lot of long-term joblessness, which basically isn't counted in the data that is out there. So, it's really a very foggy crystal ball that the Fed has to look through, and indeed any of us.
All right, now the S&P yesterday was at 1992.37. Do we know where it's at now? Has it cracked the 2,000 barrier?
No, the Fed, the S&P is down about 2 points, so
okay.
It's down just a little bit today, but it would be quite within the realm of possibility for it to be through that barrier. I will note that the NASDAQ today did move to a new 14-year high. The last time it was at this level was February and March of 2000, just before the large bust. I'm not saying that's what's going to happen this time, although it certainly could. But this is the last time we saw those kinds of high prices for tech stocks.
What's the feeling then if the S&P, and when it does hit that 2,000 mark, is that a signal to buy, or is that a signal that things have kind of topped out?
Well, that's a good question. I really can't answer that one.
What would be your best guess? What do you think the folks, the investors and all those are saying?
My best guess is, there's still a lot of people who are basically saying, you know what, I don't believe this market. And you know what, as a market moves higher, it draws more people in. And of course, that's the very dangerous part that we see with a market like this that does drift higher, that a lot of us that are sitting on the sidelines say, I can't stand it anymore. I got to buy into this. I'm missing out on too many gains. And of course, that's in many ways the worst thing that you can do. But we just don't know. We don't know at this point whether or not this is sustainable, or will it turn around and move in the other direction.
We don't know what we don't know, and we're going to wait to next week to find out. Jeff, a pleasure, my friend. Have a great weekend. We'll talk to you again on Monday.
Thanks, Ed.
All right, thanks a lot. Hey, reminder, too, be sure to get your copy of Warren Buffett's Next Door, the world's greatest investors you've never heard of, by visiting FIR411.com. And also check out Jeff on Newsmax.com. Now to this American moment.
By mid-1944, German military occupation engulfed the continent of Europe, while across the English Channel, an armada of men and equipment was preparing to take it back. On the 5th of June, Allied armies from the United States, Great Britain, and Canada joined those from Australia, Belgium, Czechoslovakia, France, Greece, New Zealand, Norway, Poland, and the Netherlands, and set sail for the Normandy coast. But they weren't all soldiers. At morning's first light, London bureau chief for the future NBC radio network, George Hicks, broadcasting live from the deck of an American ship, provided Americans back home with a front row seat.
Here we go again. Another plane come over. Right over our port side. Rangers are making an arc right over our bow now.
Supreme Allied Commander General Dwight D. Eisenhower also used that same venue, radio, to inspire both his troops and the nations they were being sent to set free.
The tide has turned. The free men of the world are marching together to victory.
The date was D-Day, June 6th, 1944. You're watching An American Moment on Newsmax TV.